Okay, let's dive into this. We're looking at OpenAI and these, well, frankly, unprecedented infrastructure deals. We're talking multi-hundred billion dollar commitments.
Right.
And these aren't just, standard contracts. People are saying they're reshaping the whole AI economy.
Yeah, absolutely. It's creating this thing analysts are calling the AI capital flywheel.
The AI capital flywheel. Okay, so our mission today is to unpack that. This idea that tech suppliers are basically becoming the main financiers for their biggest customers. What does that actually mean?
Well, what's fascinating, I think, is just the sheer scale. When you look at the commitments with nVidia, AMD, Oracle, these aren't your typical deals.
Not at all.
They're more like foundational pillars for a whole new industrial logic. It's all about locking down the most critical resource, which is elite compute power.
And we're measuring that resource in gigawatts now, right? TW.
Gigawatts. Because it's not just the chips anymore. It's the power, the cooling, the entire facility infrastructure. That's the real bottleneck for scaling AI.
Talking about maybe $100 billion staged investment from nVidia to OpenAI. How does that work? Is it just cash?
No, not quite just cash. Think of it more like a massive capital backstop, or maybe a huge pre-approved credit line.
Okay.
So NVIDIA commits the capital or the financing facility, and OpenAI essentially turns right around and uses it to buy NVIDIA's systems. They're 10 GW worth.
So it guarantees supply for OpenAI.
And guarantees demand for NVIDIA. It's quite ingeniously engineered, really.
Right. A massive closed loop. Okay, then you've got Oracle, a, $300 billion 5-year contract?
Historic is the word being used. Yeah. $300 billion starting 2027 for 4.5 GW of cloud capacity.
That one deal basically vaults Oracle into the top tier of AI cloud providers, doesn't it?
Instantly, yeah.
But wait a second. That spend, the annual cost. But how are analysts project OpenAI's 2025 revenue at maybe $12.7 billion? This Oracle deal sounds like it costs almost 24 times that per year. Is that just a colossal gamble that AI has to generate unbelievable returns like tomorrow?
That tension is spot on. And that probably explains the strategic thinking behind the AMD partnership, too.
Diversification, I assume?
Partly, yes. Securing 6 GW of AMD compute helps them not be totally reliant on NVIDIA. But the really clever bit, the strategic genius, is how AMD structured the deal financially.
The incentive structure. You mean the warrant?
Exactly, the warrant. AMD gave OpenAI the right, a warrant, to buy up to 160 million AMD shares. That's like, what, 10% of the company?
For how much?
For 1 cent per share.
1 cent.
Yeah. I mean, it's basically free stock, but with strings attached.
Yeah.
Huge strings.
Okay, what are the strings?
It only vests. OpenAI only gets the stock if they actually deploy the AMD hardware, and if AMD's stock price hits some really ambitious targets. We're talking maybe up to $600 a share.
So OpenAI becomes a massive, financially motivated cheerleader for AMD's success against NVIDIA.
Precisely. They're incentivized investors in their own supplier's ability to compete. It aligns everyone long-term.
Okay, so pulling it all together, this AI capital flywheel, the core idea is the circular flow of money.
Right. Supplier invests huge sums in the customer. Customer immediately uses that capital to buy the supplier's products.
Which then shows up as the supplier's revenue.
Yeah.
Take NVIDIA again, analysts figure, of the $13 billion in revenue they might get from OpenAI in 2026, maybe $10 billion of that is just this recycled capital.
Wow. Okay, so what are the big implications here? The risks.
Well, the big one is potential market distortion, isn't it? You're creating what some call financially engineered demand.
Right, it blurs the line. Is the demand real organic growth, or is it just this self-feeding financial circuit?
Exactly. And that fuels all the talk about an AI bubble. Then there's the risk for the consumer, like OpenAI.
The spending level.
The sheer scale of the spending commitments, that Oracle deal, for example. And analysts are already projecting a potential funding shortfall for OpenAI, maybe $62 billion in 2026 alone.
Even with all this supplier investment money flowing in.
Even with it. So the long-term sustainability, it all hinges on these AI models generating absolutely massive cash flow very soon. So the old lines, between the chip maker, the cloud company, the AI developer, they're just dissolving.
Completely dissolving, yeah. Replaced by these incredibly integrated, deeply incentive-aligned partnerships.
All focused on locking down that one critical resource, elite compute power.
Right. Which leaves us with a really provocative thought for you, the listener, to chew on. Given that the whole future of this AI economy seems balanced on these highly leveraged companies eventually making good on these bets,
Making real money.
making real money, generating real cash flow. How should investors, how should you, tell the difference between genuine market demand and this kind of engineered growth, especially when you see $100 billion investments getting instantly recycled back into revenue?
That's the multi-hundred billion dollar question, isn't it?
It really is. That's the defining question for this new AI era, I think.